Welcome traders and investors. My name is Nandis. I'm the founder of Dalrymple Trading. Today is Tuesday, the 30th of September 2025. Here to look at the S&P 500 along with WTI Crude Oil and gold. So kicking our analysis off with the S&P 500. So what we've seen is a bullish movement from 65.75 back on Friday last week. We gained all the way up. We didn't quite reach all-time highs, just shy of that, then we corrected, and we're basically consolidating at the moment. So in the US today, there are a couple of things to be attentive to. One is the Consumer Confidence Index, which comes out today, so that could alter the market. The other issue that's at play is the current budget and the potential government shutdown in the US. So unless the Democrats and the Republicans can agree on a budget going forward, we're bound to see that instability in the market in terms of this proposed shutdown of government services. It's happened in the past where it's been shut down for an hour, sometimes 2 hours, sometimes for a couple of days. I think the largest was 8 days, I believe. You need to check up on that. But basically, it's that back and forth between the two parties until a budget can be formed. So obviously that can create a bit of instability in the financial markets, especially when it comes to the S&P 500. But looking at the market overall, it is still a very bullish trend. I've stuck to a bullish swing strategy at the moment. So you can see I put a long position on Friday. I'm still holding on to it unless the structure of the market changes, at which point I will exit that position. One of the benefits of playing this sort of long position in a swing trading strategy is that the fees are reduced that you pay to your broker. So it gives you that as well. And obviously, you don't need to be looking at your charts every 2 minutes to see what's happening. And obviously, I'm looking at an hourly chart here. So I calculate my risk to reward based on that. Now, obviously, I've got tight stop losses just in case a move turns against me. I've got all that set. So I'm trading in a very systematic manner, and you can do the same, right? So you need to always work out your risk to reward ratio before you execute any trade, and to know when you're wrong and to get out of the trade when you're wrong. So at this point, I'm still long on the S&P 500. We're yet to see where this goes. Obviously, the economic news today can, really upset the market, and then we could see a small correction, but that's to be seen. Looking at gold, we've been hitting all-time highs pre-market hours. 38, 57, 75 is where we're at. So we saw a small correction from Tuesday through to Friday last week, and then it's been off to the races again for gold. So even to buy into gold, we haven't seen a discount yet. So I'll be keeping an eye on the market for a potential discount where prices do pull back a little bit with the opportunity to buy. In terms of my bias, of course, it's still very bullish and raging at the moment. So we'll see what happens there. WTI Crude Oil. So we saw prices obviously rally from Tuesday through to Friday last week of the news with the president basically advising a further increase to tariffs if countries do buy Russian crude oil. So that's obviously caused a supply side issue which prompted the prices to rise. Then we sort of saw prices come back down. Obviously, off the back of that announcement, there was no sort of concrete changes that had occurred in the world as a result of that. And the other reason is that the OPEC output has also been increased as well. So putting those factors together, we're seeing a correction of price. I mean, if we look at it, crude oil was heading down anyway, right? It was very weak, historically speaking. So this is a correction to the upside, and now we're seeing prices come back down. Now, ideally, short selling into a instrument like this, I would love to see prices rally up a little bit further, get those bulls to be exhausted. But where it is sitting right now, it just seems like the bears are fully in control. It's so bearish that it's just been sitting on that third standard deviation for quite some time. I would love to see this rally a little bit more before I execute a sell, but it's not working out that way. And that's one of the things about trading as well, that we wait for the market to come to us, and we don't necessarily just jump on anywhere just because we believe we're going to go short. Even for us to go short on the market, we need to get a good position where to leverage that, right? So for me, that position would be further up, somewhere close to the moving average or even higher. That shows that the bulls are going to try to take prices higher. And if they're wrong, then obviously the bears are going to come back and push them down, and that's going to be a big downward move in price that can happen very quickly, very sharply. So that's what I want to see. Like from here, prices can pull back up, right? I mean, we're very far away from the standard deviation. The middle line is the standard deviation. As we go further and further, it's like an elastic band. So we're, over 3 standard deviations away from mean. So we want it to pull back the mean or higher, and then we can look at a potential short opportunity on WTI crude oil. But for now, we're not getting that, so I'm going to be on the sidelines waiting for some action to happen there. So let's see how that all works out. It's going to be an interesting week in the market, so I'll keep you guys updated. Oh, and just before I go, I do want to announce some exciting news. So next week, I do have an interview with another trader. I won't mention his name, but it's quite exciting. We'll be doing a full 1-hour interview about his journey and how he came to the markets. And I think you guys will be very impressed to sort of glean wisdom from him, and also gives me an opportunity to basically, ask another trader what are the things that work for them, what are the things that they really struggled with, and hopefully impart some of that wisdom to you guys as well to help you on your trading and investment journey as well. So keep an eye out for that video. It's going to be called On the Sidelines, because while we're not trading, we're going to be on the sidelines, so to speak. So that'll be put up on YouTube next week once the interview has happened. So very excited to have the special guest next week. So until then, happy trading.